Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is August 21st, 2012. Lots to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. Alright, so in the previous video, or in previous videos, when I think it was called When the Markets Rhyme or something like that, or some sort, and I gave an analysis. You can take a quick look at the previous video and you can basically see what I was talking about in regard to previous history of similar patterns that we're seeing as of now. Now, let's see what happened today. Today, what we did was we created this somewhat of a, let me zoom in here, of an engulfing candle. And now, technically, on a technical level, an engulfing candle is when the body of this candle engulfs the entire previous candle. And the engulfed the candle that's doing the engulfing is basically giving you the direction of which way the market will be going. Okay. However, this is not a technical engulfing pattern, but in my opinion, for me, this is an engulfing pattern as long as the engulfer is engulfing the previous day's body of the candle. It doesn't have to be the tail, but as long as it's the body. And this body here is definitely engulfing this body here on higher volume. Now here's the thing, volume. You guys know how and time again I'm always talking about volume. We're not getting the volume that I'm looking for. I mean, after this move today, I mean, we gapped up and then we just bled out. I'll show you the intraday in a bit, but basically we did that on low volume. I mean, we had a volume today of 105 million. That's it. Okay, yesterday's one was even lower at 78 million, and so on and so forth. This volume didn't even take out the volume of 112 million, which happened on the 16th. This volume does not validate this move down. Does it mean it won't continue down? Absolutely not. There's a possibility that you could continue down simply because we're, like I said in the previous video, we're in an overbought situation, okay? And we are definitely in an overextended area where you would have pivot point, pivot point, pivot point, pivot point, so on and so forth in this rising wedge type pattern, right? And then all of a sudden we just go up and we never make a pivot. We just float higher and higher and higher. And if you look at the volume during that time from this candle over here, okay, so we just look at this line from this candle here, look at the volume. It's just dead compared to all the other volumes over here. The volume is just dead. And again, until we get volume in the market, I can't justify any type of down move. With low volume, like I always say, we got to give an upside bias. It doesn't always happen that way, but what happens is it gives the institutions a chance to prop the markets higher. That's what low volume does for the markets, where if the Feds want to prop up the markets, they can easily do so by buying into the market simply because there's not enough sellers or not enough retail traders out there just trying to dump their stock, okay? So that's just something to keep in mind. Let me load my drawings in here. Alright, so again we have this rising wedge pattern here. Now let me just zoom in real quick over here, and what we can see is that this 142.78 level, which I talked about earlier, had been tagged. It got hit and then it pulled back, and what's amazing is it got close to this 143.29 level before pulling back. So there is still a possibility we get into this 143.29 level. I mean, due to the low volume here, this does not justify the down move anyway, so there is a possibility we could definitely float higher. However, I'm gonna just give you the bearish and bullish side to this pattern, or what happened today, and then you guys can make the decision whether or not, am I saying that right? Anyways, if we're gonna pull back at this time, okay? So we hit these two levels over here, so 143.29 and 142.78. The purple line I really don't consider a level, but the 142.78 was definitely a level that held up today, which I definitely like. So if you had shorted at this level, you would have been in the money at least on the intraday. The low of this candle was 141.45, and then so we had this level here at 141.36. It got close, but it didn't quite tag it, so there's a possibility we could definitely head lower tomorrow. Now, because there's no high, there wasn't volume like this. I want to see volume like one of these two, or maybe even this one, or anything above this average line here to validate this move down. Without that volume, I can't justify anything as far as the move goes. Or, I mean, we could continue down into this 20 moving average here and then just get an easy bounce up simply because the volume's not there. Again, once the volume comes back into the markets, however, then the markets have a better chance of pulling back. Now, So that is the bearish. So the bearish side to it is we have this engulfing pattern. We did get volume that was higher from the past previous 2 days. Again, you know my rule, that the volume has to be at least higher than the previous 3 days. It's 2 days is close enough, but that is the bearish signal that I'm seeing. It is also into this upper trend line here. We're also in an overbought situation, and this is not a pivot point whatsoever. This is not a bear flag, a bull flag, or bullish consolidation. This is just a float higher. So essentially, once the markets get some volume back, it doesn't necessarily gonna happen. It's not necessarily going to happen, but it will give the markets a better chance to pull back. And when the markets pull back, it's a lot healthier when that happens. Okay, so let's see. If I'm not mistaken, I believe I shorted the market at this candle here, which means I got some ways to go. And if the markets continue down on, say, a higher volume tomorrow, something like this, at least anything above the blue line, then I'll be in a much better shape because I am still short the market. And believe you not, I almost stopped out. Okay, and I told you that in previous videos. Now, here, so that's the bearish sentiment. The bullish sentiment is this: volume. That's it. That's all I have for the bullish sentiment. Volume is so important, and that because we have no volume, or lack thereof volume, I should say, there is a chance, a big chance, that the institutions can all jump in, Feds can jump in, and it can just continue to float the market higher. And that's just definitely a possibility. Again, without that volume, I cannot validate this down move. All right, but here's the kicker. I'm going to show you, and normally I don't talk about stocks, but I'm going to show you key stocks here in the markets that might give a better hint of what's to come possibly tomorrow. I just thought of something. Before I do that, let me show you the dollar first, because this is something very interesting for you all to see. This is the US dollar. All right, this is a chart of the UUP. Let me just load my drawings in here. Alright, so here's the UUP we have. Let me just delete this line over here. We had a huge gap down and we created this doji candle on higher volume. You see that? So this definitely constitutes a possible reversal. Markets up. What? Dollar up, markets down, right? But here's the interesting part. The markets were down today, and look, so was the dollar. The dollar was also down. Normally, on a normal level, 99% of the time, when you have the dollar going up, the markets go down, and vice versa, right? In this case scenario, we had the dollar going down and the markets following suit. So what does that tell you? Well, it tells you that not necessarily something's lying, but something is fishy. Okay, could this down move today start sucking in all the bears, and then they're just gonna pop the markets higher tomorrow? That's definitely a possibility. So that's something that we have to keep in mind. All right, now let's look at the dollar futures. This is a daily chart of the dollar futures. Let me just get, so this green candle here is the after hours. Okay, and then I don't see on a technical level anything on the dollar that should constitute a reversal tomorrow for the dollar to go higher. In fact, ultimately, I have a max move here of $80.61 that the dollar could potentially get down to. Okay, again, I did say in the previous videos that the dollar was making bearish consolidation patterns, and that has been playing out over and over again. So again, if the dollar goes down, then the markets should go higher, and vice versa. But today was an exception. And that's because there could be, there's something fishy going on. So I would stay out in the market right now if I were you. In my opinion, I wouldn't be long or short as of now. I'm previously short from before, so that's why I'm still short in the market. But so this is something that's kind of fishy that I wanted to show you. However, if you do look, the volume was very nice. Okay, this is a very nice volume here. Volume on a down move. You see that? So this validates this down move on the volume. So this validates that we could just consolidate a little bit more before heading even lower. That is definitely a possibility, something we need to keep an eye on because the dollar is going to be inverse to the markets. So the bottom line is, before I get into some key stocks here, is that we have to close below the low of this candle without having a higher high. Understand? Meaning, if tomorrow we go higher than the high of this candle, which is 143.09, that wouldn't validate this down move that we had today. And if we close below the 141.45, which is the low of this candle, then then that should validate or confirm the move to the downside. But we need to see volume behind it before I can even confirm. Even if it does close down here, I need to see volume behind it in order for me to confirm that we will head much lower. Again, the 20 moving average is right here, so we could easily bounce off of that even if we did get another down move tomorrow. Okay, so it's just something to keep in mind. Now this is something interesting. JPM, the reason why I'm showing you JPM, JP Morgan, is simply because JP Morgan is the leader in the finance sector. We all know that, right? Some say it's Goldman Sachs, some say it's JP Morgan. I kind of drift towards JP Morgan as being the key player. Okay, so let's take a look at JP Morgan's play today. Nice, substantial, above average volume. The last time we had this volume was last month on the 27th. Okay, this indicated a possible reversal. As you can see, even though we didn't get a reversal candle, we definitely, based on volume alone, we had that pullback. You see how important volume is, right? Same like this candle here. Doesn't necessarily need to be a reversal candle as long as there's volume. Well, this doesn't really count because it looks like there was earnings on this day anyway. But you kind of catch my drift, right? But I wouldn't make a trade just based on volume alone, but you can see how important volume is. This, however, is a reversal candle, right? That is a shooting star reversal candle. It wasn't on an up move though. This is more of a consolidation, right? So we have this up move, we consolidated bearishly, we had this up move again, and then now we're doing a very beautiful bullish consolidation, my bad. And then we popped on higher volume, but then towards the end of the day we sold off. So is this really a shooting star? Yeah, it is a shooting star, but a shooting star, in my opinion, happens like after a move like this, where you would have form a pivot point. This is not on a pivot point. This is more after a consolidation. So after you break out of a consolidation period with higher volumes, and that normally constitutes even higher, a move even higher. Okay. So just keep in mind that even though that this is a shooting star, technically it is a shooting star. It wasn't in a triangular type move up. It was more of a float up, if you will. But because the volume's just been so low, the float up is it could be considered one of these moves. It was just because there's no volume that the charts didn't create a steeper move than it was this flat move over here. So just keep that in mind. But this is definitely, without a doubt, a shooting star candle, which indicates a possible reversal, and we had it on pretty good volume, and so that's pretty good. But we had that candle here too, right? And we had it on pretty good volume on there as well. So just keep in mind that doesn't always mean we're going to have a immediate reversal. So that's something that you need to watch out for. Now for JPM, if we can close below the 20, in fact, if we can close below the 50 moving average tomorrow on JPM, then yeah, I would definitely like it a lot better. Here's a chart of Apple. It's a daily chart. It's funny, just 2 days ago, not 2 days ago, just yesterday, one of my Apple friends, he's an Apple lover, he's telling me on Facebook chat to buy Apple. And I was like, there's no way I'm buying Apple at these prices. Now, maybe after a pullback, that's possible, but no, that's crazy. And had I done that yesterday, I would be losing money today. Okay, so I just want to let you guys know that that's why I love technical analysis so much. So I had this 657.42 level. We pierced it yesterday, but we didn't confirm, and then now we closed below it, which is cool. Another cool thing about this move today was it was on super good volume. I really like the volume action on Apple today. This indicates a possible reversal. Okay, and as we all know, Apple is a leader in the tech sector. It's also one of the biggest stocks in the S&P 500. In fact, in my opinion, that's probably why that SPY dropped, was because Apple sold off. Now, one key thing to realize about Apple is if you close below 50% of the day before, that's a pattern. I forget what the pattern was. If you guys can send me a message to remind me. Hang on. Okay, I'm not sure. This pattern is opposite of the piercing pattern, but I forget what it was called. I'm sure you guys know what I'm talking about. Anyways, this is definitely a reversal candle pattern on high volume, so this looks like it could continue down lower. Now the only problem I have is, again, the actual general market is low volume, so institutions can easily prop Apple up. In fact, if they wanted to raise the markets back up, they would just buy Apple again. And again, shorting a strong stock, I mean, this stock is definitely one of the powerhouse stocks. I mean, it's just it's a higher risk. I mean, you want to short weak stocks and go long strong stocks. So a lot of times people will go long after a pullback like this. So you have to keep that in mind. Now, same thing with SPY. If Apple closes below this candle here, or if it closes like just a hair below or even more, then that would validate the down move for Apple. Okay, in my opinion. Alright, this is the chart of the GLD. As you can see, the GLD, the reason why I'm bringing this chart up is because it's right into this upper trend line here. In fact, if I switch to the weekly chart here, you can see there's this upper trend line here that I created, okay? And of course, the weekly always trumps the daily. It's right into this weekly upper trend line here. I have these two mathematically calculated levels here at about approximately 160.75 or so. And we also have the 200 moving average here. So if the gold actually can get into here, say a gap up tomorrow, then it'd be interesting to see if we get a small pullback on gold. Again, I'm already short on the SPY by going long in the SDS. So in my opinion, you know, that's not necessary for me, but it's just something that I'll keep an eye on. I mean, if it looks intriguing and the volume comes back in the market, then I may be tempted to short gold as well if it reaches that level. In addition to that, this doji candle was made based on high volume here, so there's definitely a possibility that we may already have a reversal on gold tomorrow or as early as tomorrow. But again, it's all about the volume, and if there's no volume in the markets, if there's no sellers, then we're just going to continue to float higher no matter what we think or do. I mean, that's just what the charts are telling me right now. Sometimes I like looking at the SPX, which is the actual S&P 500. I don't normally do it, but sometimes I do to validate the SPY. But the reason why I don't like to is because I don't see volume on it. But as you can see here, unlike the SPY, we do have this somewhat of a shooting star here. Wait a minute. Okay, so we do have this shooting star type looking candle here, and if you kind of zoom in, it's almost an engulfing candle from the previous day's body as well. So you know, that's a pretty good sell signal here on the SPY. It's also in this double top here, and you know, like I said in the other video where the markets rhymed, the SPY, unlike the SPY, hadn't created that double top yet. Okay, today it has hit the double top, and now it's pulling back. So there is a possibility that we may see continued downside tomorrow. Just keep in mind that without that volume, I mean, you just have to be cautious. I mean, they always say never try to short a dull market, and right now it is a dull market. So just keep that in mind. I have a feeling that towards the end of this week, maybe even next week, but definitely in September, we should see a lot more volume coming back into the markets. Alright, I hope this was helpful for you. I really appreciate you stopping by and checking out my videos. This is your 7-minute market update, now going on 18 minutes. God bless you all. Thank you for watching, and I hope to see you in the next video.